G'day everyone, welcome back to Pete's Investing. Today is June 2nd, 2023. This is the spot silver price update. On the weekly and the daily, it's broken into a neutral positioning, so neither long or short trades. Basically on the weekly first, you can see there our triple moving average and our moving average of the CCI is breaking up from a downward positioning, or actually it was originally long, but it's currently breaking down. So yet undecided whether to go long or short. Primary trend on the weekly. On the daily, we've got a bit more clarity here in terms of support resistance. We did have a minor support level forming here, and that's now turned into a major support. So I'm going to move that horizontal support to that level there, and we've also got a minor resistance forming there at 2402. That support there, by the way, was 2267, the support level. So in the coming days, if this bounces from that level, we're going to move that hard support at 2607 down to that dotted line as our major support, as our major resistance area. You can see there more closely as well, we did have a divergence, a bearish divergence play out on the CCI versus the price chart, and we drew a channel within that divergence range, and the price broke below that channel, which is an indicator for us to go short. If you're trading that, and our initial target range was between a 38 and a 50%. We always take the closest Fibonacci retracement. In this case, it was that range there, the Fibonacci, and that 38 to 50% level in that rectangle was our target range, and it hit that target quite nicely and actually fell below the 50% level off that support. So now we bounced off that, and now we're potentially going to bounce down from there again, and that may, if it does bounce down from there, we may see it come and rest on this descending diagonal line in the near term. But if it breaks through that, obviously, then we need to see if it's going to be resisting along that diagonal there as well. So looking at the hourly chart more closely, again you can see there that's the chart there. Now we've got another potential upside here, and I'll draw a Fibonacci between that low and that high. Now you can see there it's currently resting on that 38%, that minor resistance we showed you on the daily. So the next level here, we're going to be putting another target level. If it breaks above that, then we're looking at a potential target between that area and the 50% level initially. Of course, it can go higher, but we'll see if it's going to respect that resistance and bounce down, or if it does break up, that'll be our next target level in there. Also, on the hourly chart, I've got this back test, this long program running back here since the start of 22. You can see there mostly single contract entries, and in this case there were a few contracts entered where the price fell against us. This is a long program only. This is a profitability chart. You can see there we entered 4 times, 4 contracts. We don't use stop losses. Now the way to avoid that multiple entry and that drawdown on your profitability, as I always say, that was back in June 22. So going back to June 22, that was that period there. You would have avoided going long during that period. Like if I draw back there as well, during that period, yes, you can see there is no long positions. There are primarily short positions on our indicator. Likewise, during that period, there are primarily short positions on our daily indicator. So again, when a weekly and a daily align, you go short. In this case, we would have gone long only when the weekly and daily aligned. So to understand this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also take requests to look at various instruments. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.